Hello and welcome to this explanation on liquidations. This question is called Yaptrap Pty Limited. Let's just call it JT Limited. And the question reads as follows. Shareholders voted in favour of a voluntary liquidation. The directors proposed a liquidator to the master of the court. The liquidator was hired by the court at a fee of 20,000 Rand. The following is a trial balance of the assets, equity and liabilities held by JT Pty Limited on 31st December 2020. If we look at the trial balance, you would find that there is property, accumulated depreciation on the property, there is motor vehicles, accumulated depreciation on the motor vehicles, inventory, debtors, bank, long-term loan, trade creditors, there is a ordinary share capital account, a retained earnings, and a revaluation reserve. When we read the additional notes, note number 1 says, the property is held under the revaluation model and they used the elimination method, and it was not revalued at year end. Depreciation was accounted for correctly. It was determined by an estate valuator that the fair value of the property was 850,000 Rand on the 31st of December 2020. So what is important about this question is that we are faced here with a revaluation that needs to be done before we start with our 7 steps of liquidation. So here we need to apply our first semester knowledge of revaluations and the revaluation model under IAS 16 in order to answer this part. Then in note number 2, the creditors were paid in full, the long-term loan was paid in full, and an admin fee of 7,000 Rand was charged by the financial institution in order to process early down payment on the long-term loan. The third note says the liquidator was able to collect 30,000 Rand from debtors not taken into account by the trial balance. So if we look at the trial balance, the debtors was 50,000. So of that 50,000, they were able to collect 30,000. Then note number 4 says JT Pty Limited's nearest competitor out Pty Limited has offered to take over the following assets and the following purchase price was proposed and accepted. So for the property they offered 800,000, for the motor vehicles 400,000, for the inventory 100,000 and for the debtors 15,000. In the required part, it says we need to journalize the liquidation process as it relates to JT Pty Limited on the 31st of December 2020. Ignore journal narrations. All right, so let's explore how we're going to do this question. And where we are going to start is the revaluation of the property. All right, so when we revaluate a property, the following needs to be done. The first thing that we're going to do is we need to apply the elimination method, which means the accumulated depreciation on the property needs to be eliminated. So if I look at the accumulated depreciation there, it's 800,000. So the first thing that I am going to do, and I already typed my steps going forward, I typed my 7 steps on the memo already so that we don't have to waste time by typing out the words in the steps. Right, so in the first instance, we will have to close off the accumulated depreciation. So I'm going to debit the accumulated depreciation on the property. And in terms of the elimination method, we need to put it against the cost price. So it's going to be property admin building, as it is called in the trial balance. Right, and the accumulated depreciation was given to us, 800,000. So I'm just typing it. Right, after we've done that, we need to account for the revaluation surplus. So the revaluation surplus, I'm just going to calculate it here on my right-hand side. So I'm going to start by saying there was a cost price for this property, and the cost price was given to us as 1.5 million. Then the depreciation or the accumulated depreciation was 800,000, and we were left with a carrying value, which is now the difference between the two, of 700,000. If I look at note number 1, I'm told that the fair value should be 850,000. So we have a fair value, and the fair value is 850,000, and it seems to me like this value needs to go upward. So this would be a surplus then of 150,000, which is the difference between the fair value and the carrying value. In order to account for this surplus, we will say we need to increase the property value. So we're going to debit property, admin building, and we are going to credit the revaluation reserve. I'm using the word revaluation reserve because when we go back to the question, that is the account that already exists. So if they said revaluation surplus, I would call it revaluation surplus. I'm just continuing with the terminology that they've already used in setting up the financial statements. Right, and we're going to account for that 150,000 Rand. And there we have completed our revaluation that needs to be done. From this point forward, we will now start with the steps of closing off the assets. And we need to pay particular attention to the property, because now we will not be eliminating the accumulated depreciation of the property in step 1, because we have already eliminated it when we have done the revaluation before we started with our steps. So when we want to close off the property now, what we will do is we're going to take the property account, admin building, and we need to remove it. So it's going to be a credit, and we're going to remove it at the fair value of 850,000 because we just did this entry to increase it to 850,000. So the balance in that account, in that cost account or gross carrying account, will now be 850,000, which needs to be eliminated by credit. Again, the accumulated depreciation on the property has already been eliminated, so we cannot apply it again at step 1. That will be double counting. Right, thereafter we're going to continue as usual, where we have motor vehicles and we have accumulated depreciation on the motor vehicles, and all these accounts need to be eliminated. Then we also have inventory and we have debtors. Please note again how we do not eliminate the bank account. The bank account will only be eliminated when we do step 7, which is the distributions to the shareholders. Right, so if I look at the motor vehicles, the cost price that I need to eliminate is 800,000. The accumulated depreciation that I need to eliminate is 400,000. For the inventory, I am eliminating a total of 100,000. And for the debtors, I am eliminating a total of 50,000. Then, of course, these accounts will not balance. We need to find a balancing figure and call that a liquidation account. All right, it seems to me like the liquidation account balance will lie on the debit side. So I'm going to take all the amounts on the credit side, add them together, and then I am going to minus the debit from it that already exists, which is the accumulated depreciation, and that gives us a balancing figure of 1.4 million to be booked to the liquidation account. Step 1 successfully completed. The only trick to pay attention to is the property that has been revaluated. We need to go and take out the fair value because we adjusted that gross carrying account to the fair value. Right, Then the next step is we need to close off and pay all our liabilities. So they tell us in note number 2 that the creditors and the long-term loan was paid for and that there is a fee of 7,000 Rand that needs to be accounted for on early payment, on early down payment. Right, so I'm going to close off the long-term loan and I'm going to close off my creditors. The long-term loan was given as a total of 600,000. The creditors were given as a total of 75,000. In the bank account, we have payments that need to be made. We are paying the 600,000 long-term loan and we are paying the creditors, and we also have to pay the administration fee of 7,000. Our accounts will not balance. We will need a liquidation account entry here, and the liquidation account will be equal to the admin fee that we had to pay from the bank account. Right, moving on to step number 3. In step number 3, we need to close off our reserves. So I'm going to close off my retained earnings. That's quite easy. But we need to pay attention to the revaluation reserve. That one is a bit tricky because for the revaluation reserve, we are going to argue now that we already had a 75,000 Rand in that account, but we must not forget that we added to that account when we did the revaluation. So we need to go and add that 150,000 to that account when we close it. So closing off the revaluation reserve with a total of 225,000. Again, we need a liquidation account to balance out the figures, and it will seem like we need a credit balance for the debits and credits to be equal. In step number 4, we need to make a payment to the liquidator. And in the introduction paragraph, it was said that the court approved a fee of 20,000 Rand. So I'm going to debit my liquidation account and I'm going to credit the bank because I need to make a payment from the bank account. The total there, 20,000. Note, or step number 5 rather, we need to account for the purchase price. So the purchase price is the amount of money that we will receive from this competitor called Out Pty Limited. So here our bank account is going to grow and we're going to have the contra account liquidation account. And for the bank, we are going to receive a number of amounts. It is 800,000 for the property. It is 400,000 for the motor vehicles. It's another 100,000 for the inventory and another 15,000 for the debtors. Right, we're also going to take that amount to the liquidation account so that the debits and the credits are again equal. We are on step number 6 where we need to look for, in this instance, it was debtor collection. There could also be some random additional sales of assets. But in this question, if I refer you to note number 3, you would find that there's only debtor collection to be accounted for in this example. So here they say that the liquidator collected a debtor amount of 30,000 Rand. So here we're going to say the debtor account was already taken to the liquidation account. So under normal circumstances, we would have said debit the bank, credit the debtor, but now the debtor does not exist. We already moved it in step 1 to the liquidation account. So now alternatively, we're going to say debit the bank, credit the liquidation account. And the total collectible there was 30,000. Right, then we are on our final step, step number 7. And here we need to make distributions to the shareholders. So the first thing we're going to do here is we close off our share capital account. and that amount was given to us in the trial balance as a credit amount of 500,000. So now we will debit it. We know we have to close our bank account, and we need to use the liquidation account as a balancing figure. So let's see what's happening with the bank account. If I look at the question at the trial, in the trial balance, I see a bank account of 100,000 Rand. So I'm typing that into my calculator. I'm starting with the 100,000 Rand, which was in the bank account in the trial balance. Then I'm going to go back to all my transactions and see what happened to the bank account. The first entry that I see where the bank is affected is here in step number 2, and I'm just going to highlight it, let's say in blue. Then I see another, then I see another bank entry here, and I see another bank entry in step 5, and I also see a bank entry in step number 6. So I'm going to take the sum of all these entries to get to a final bank balance. So I've got the 100,000 on the trial balance on my calculator. Then I'm going to start by minusing in step 2 the 682,000 because a credit is a minus in the bank account. Then I'm also going to minus the 20,000 because it's again a credit. I'm going to add to the bank account the purchase price, which is 1,315,000, and I'm also going to add the 30,000 in step number 6. And when I do that, I get to a bank account total of 7. I get on my calculator for the bank, I'm just going to type it on the right hand side, I get 743,000. And this is a positive answer on my calculator. So this means that in terms of the bank, it was a debit entry, and if I want the bank account to be closed off, I need to make a credit entry, 743,000 credit to make it go away. I'm going to short the liquidation account total here, and I'm going to just calculate the balancing figure, and that is 234,000. You can double check yourself when you get to step 7 to see if you have all the answers correct. To do that, you need to go and add up all your liquidation account entries. So I'm just going to highlight them. And please remember, if it's a debit, it's negative. If it's a credit, it's positive. The liquidation account works like an income account. So there's another liquidation. I'm just putting them in a color. Green, there's another liquidation account, there's a liquidation account total, there's a liquidation account total, and here is a liquidation account total. So now I'm going to add and subtract all the green totals to see if it's going to match that liquidation amount that I have there. Right, so I'm starting with a negative on my calculator from step number 1. So that's minus 1.4 million. Then I am going to minus another 7,000, and I'm going to add the 325,000. I'm going to minus the 20,000, and I am going to add the 1,315,000, and I am going to also add the 30,000 in step 6. And that gives me a positive answer. So on my calculator for the liquidation account, I have a positive answer of 243, I beg your pardon, 000. And it's positive. I'm just going to say it's positive. So that means that it is a credit balance. And if I want to close off a credit balance, I'm going to make a debit entry. So in other words, the balancing figure and the total here and the side of it, the debit side, corresponds, which means that in doing these calculations, I did not make any errors. All my calculations balance out. All right, I hope that you have enjoyed this example, and please let me know if you have any other questions around this liquidation topic. All right, goodbye.